Good afternoon, everybody. Welcome to this webinar. This is going to be an exciting one because things have certainly changed since the last time we were with everybody, and change for the good, we'll say. Despite the craziness going on in Congress right now, we're going to call this a good change. So we're going to let people get into this. There's a few hundred registrants, so we're going to have to wait a few minutes to let people get on to the webinar, and then we'll get started. We have some good news that things are changing as we're meeting right now, so you're aware that there is action in the Senate right now to change the stimulus program that they voted against last night. We'll get into that a little bit. We're not going to talk much about stimulus payments today. We're going to have the emphasis today is going to be on what's affecting our businesses as small business owners who likely all went through the first PPP program. Some of us got SBA loans with EIDL grants. Some of us had SBA loans that had forgiveness periods on them. A lot of us were anxious about the taxation in this bill and the fact that we may have had to give back 40% of our PPP loan money. So there's a lot of changes that happened over the last week. We're going to go through the ones that are most impactful for small businesses today, including sole proprietors, including independent contractors, LLCs, S Corps, C Corps, whatever your entity is. You're all going to be impacted by what just happened this past week. We're going to try to dispel some rumors and then create some other ones and see what happens, because there still is a lot of change that's going to come out in this bill. The first PPP loan, if you recall, was issued in March the 20th, I believe, was the date that the CARES Act passed, and that bill was changed all the way up through November, and then changed again. Big changes in the first PPP bill, just in this bill that was passed last week, signed by the president on Sunday night. How are we doing? We got a lot of people in?
Let's wait 1 or 2
I'm going to wait a couple of minutes. It's only 12:01, so we'll,
there's still some people.
I already have a question. Morning, Bill. Merry Christmas.
Bill. There's some good options for Bill in there.
Yes. A lot of changes for the medical profession in here, a lot of opportunity as well that did not exist in the first loan that came through. Let's just give it a couple of minutes, 2 more minutes. We'll let people get in, and then we'll get through this pretty quickly. Our MO will probably be the same as our prior webinars. We'll talk for a while. We'll share our information. We have slides that accompany all this, and then we'll open up for Q&A, and we won't come off until we answer all the questions.
I'm going to answer it.
Let's see, she might be talking about. Yeah.
Hey Tom, can you hear everyone okay and see everything okay?
See you guys just fine.
All right. Hey Bill Highland, I know you're on the call here. How's our sound?
Can you just, Bill, in the Q&A say how if we didn't hear us?
We had a couple of sound issues.
The last one, apparently people couldn't
Before.
hear us.
We want to make sure everybody hears us one time. You know?
Sounds like people can hear us.
How about outside?
Good here. All right. Sean McDermott, I like that. I know you're
All right.
enough up.
Sounds like we're good. So we'll move forward. And any banker that needs to drink during this, one of the questions we got already was, can I drink as I listen? Yes, especially bankers, because this poor bankers. Well, I'll tell you, we've been loving our bankers since March, and we thought we didn't have to love them as long as we did, but boy, we're going to have to love them a lot longer once you find out what's going on with the changes. Good afternoon, everybody, and happy holidays, happy New Year. Let's cheer for our government for as dysfunctional as they are, at least coming through with some great changes at the end of the year that'll impact all of our small businesses. My name is Bob Simpson. I'm the managing partner at Brinker Simpson and Company. We're a regional CPA firm based in Delaware County outside of Philadelphia. We have a client base of small business owners that range anywhere in revenue from pre-revenue to 100 million. Most of our clients are in the $5 to $25 million revenue range. I've been in business 30 plus years, have a robust tax department and audit department. We do outsourced accounting services, some CFO work. We have fraud and forensics and litigation support and evaluation team here. With me today is my usual cohort, Kristen McCabe, who has helped us and has led the COVID response team here since the very beginning of the program. And has put in countless hours trying to learn, relearn, and relearn again all of the changes. We're also joined today by Tom Saris, who's new to our group, but Tom brings a wealth of knowledge from small business situations as he was a consultant for the small business world in the area here before he joined us. And Tom has a great voice for Zoom, so we added him to the panel today, but he has a lot of knowledge on how the new PPP program is going to work and how the new CAA is the name of our bill is going to work. So on Sunday night, as I'm sure everybody's aware at this point, President Trump did sign the second stimulus package that came out. The reason he signed it was because the federal government would stop operations on Monday without a signing, and the unemployment payments that the federal government makes to the states would stop that day. So unemployment checks for this week would not go out. So Trump acquiesced, even though he hated the bill, and decided to sign it, hoping that there would be some more stimulus money coming out to individuals. And he redlined the bill itself and sent it back to the House, crossing out all of the things that he thought should not be a part of that bill. We're not going to talk about that much today. As it stands right now, the bill is signed. It's still in a bill form. There are no rules written for this bill yet, other than what we know at this point. There were 5,993 pages in this bill, and Kristen and Tom have read them all. That's why I brought them here today. I read about 23 of them, and I think that's all we pretty much need for this conversation. But it's a massive piece of legislation, and everybody who went through the first program with us is going to know how many changes and how many rules were written by SBA and by the Treasury Department. That's all going to start again. And some of the provisions in this bill are so obscure, we'll call it obscure, that I can only imagine. We're guessing at some of these going forward. So we do have a disclaimer in here, and we just want to make sure that you're aware of our disclaimer that we're not giving any advice at this point, and we are recommending to you that you do contact your accounting expert that you use to help you through this program. There's a lot of timing sensitive issues that are in here. Some things should be done this week if possible, and we'll go through those and we'll let you know what they are. Just some house cleaning there, so please use the Q&A to ask questions. Try to hang on a little bit before you ask your questions, because we may answer those questions as we go. But if you feel the need to get the question in there, we will answer them. If we're able to answer them during our talk, we'll do it. If not, we'll wait to the end and we'll answer them live so that everybody gets the answer to the question. Because what we found in our earlier webinars is that the same question gets asked by a lot of people. And I think you're going to see that again with this next program that goes through. So we will email the slides to the participants, and we do record this. And so you can go into our website to get the recording of this if you need to. So here's our agenda. Just take a quick look at it. These are the only topics that we're going to cover today. So we're going to look at the bill. We're going to talk about it. We're going to talk about the family leave and sick pay program that's been updated. We're going to talk about this employee retention credit, which could be a huge source of new money for businesses who couldn't get it in 2020, but may be able to get it now. We're going to talk a little bit about the EIDL Advanced program, because that has changed going forward. And then we'll get into the hot button today is the PPP program. We're going to talk about what's changed with the first PPP loan situation, and we're going to talk about forgiveness changes, and we're going to talk about tax deductions And then we'll get into round two, because there is a second PPP program. It's $284 billion. It will be limited in its applicability to companies. There will be a new requirement for you to get in, an economic downfall requirement in order for you to qualify for the second loan that was not in the first loan. So some of us will not qualify for the second loan. Some of us are going to try to have to figure out how we qualify for the second loan. But we'll get into that at the end. Just to go over some quick notes here about the CAA 2021. We definitely got to come up with a better acronym and a better name for the
But
bill.
wait, there's
No, well,
but wait, there's more. That's what we're
no,
calling
but
it.
wait, there's more. Yeah, there's a whole lot more to this. So we're going to talk about economic impact payments. These are the stimulus checks. Mitch McConnell is about to go back to the Senate and ask them to vote on the $2,000 stimulus payment that they voted against yesterday. And he added two stipulations to that bill that had already been passed by the House. One stipulation is that the government's judicial committee start an investigation into the presidential election that just occurred, and the other is dealing with the online services and their use of information. I doubt personally very much that bill is going to pass. So what I read today was those checks for stimulus payments that are going to be $600 to people that on the lower income end of things will start going out on Tuesday. But we'll keep you updated if that happens. SBA loan payment deferrals we're going to talk about. That was a program where if anybody had an existing SBA loan or had secured one by the end of September, the SBA was paying your loan payments for you through the end of the year. They have extended that payments through March of 2021. So you get 3 more months added onto that program. Grants for shuttered venues. This is a very special part of the bill. It's called the Save Our Stages Act. And if you're in a entertainment venue, if you're in a club or a museum or anything like that that provides entertainment, there is special grant money available to those venues. But it's a very tricky program because it's a grant program. And we believe the grants are going to be issued to the states, and then the states are going to issue the money out to the clubs based on the magnitude of lost revenue during the past year. That's a very tricky bill if you're in that area. Unemployment has taken a boost. There's going to be $300 added to unemployment checks, or it's going to be a federal unemployment payment straight to the unemployed for 13 weeks. Rental assistance, there's more money in the bill to assist with rentals to avoid the eviction process. Student debt forgiveness was not addressed in this bill, as had been talked about by many, but the interest-free student loan program that ends in December, people are going to have to start making their payments again come February 1st. That may change. COVID vaccine delivery program, there's actually $26 billion in this bill to help with the vaccine delivery, and I have determined I am in the wrong business. I should be in that business. Medical expenses deductions for taxpayers that was supposed to change to 10% of income in 2020 is now rolled back to the old 7.5% limit of income. Many tax credits, energy credits, items like that were set to expire have now been extended. Retirement plan withdrawals, it became pretty popular by some companies that were having financial problems during the year, which was going to end at the end of December, has been extended. So if you're under 59 and a half and you need to make a withdrawal from a retirement account, you can do so without penalty. You can pay the tax on that money over a 3-year period, or you can pay that money back over the 3-year period and not pay the tax. Medical expenses, I already went through that. Where am I? Oh, business meals. Oh, big one here. Business meal deduction was changed for the next 2 years going forward. Business meals were 50% deductible. They now become 100% deductible for the next 2 years. So VJ, you can start picking up some checks. Charity deductions for people who don't itemize. That will be a $300 or $600 deduction against income, $600 for joint filers. Tuition credits have been repealed, but I think we're going to see that become changed. And a very important thing, if you have a flexible spending account in your business, you will. Thanks, BJ. If you have a flexible spending account, it's a use it or lose it program. And the old program was that by the end of the year, if you didn't spend the money, you forfeited that money. Those programs, like HSA accounts, now will carry forward. So there's no use it or lose it. Let's talk first about FFCRA, paid sick leave and family leave. This is a program that we use pretty extensively at our firm, and it allowed employees to take off from work due to COVID situations, and then they would be paid by us, by the company, for continued out of the office instead of unemployment. They would be continue to be paid, and we would get tax credits for paying those people that money. Now, there was a 2-week period where you got 500 a day.
$511 per day
Yeah.
for the sick pay related leave, and I
Right.
think it's $210 for the family leave, which is
Right.
10 weeks, and the first
So-
one's 2 weeks.
So if you're sick, if you're COVID sick, or your spouse is COVID sick, or a child is COVID, you can get pay up to $522 a week, a day, from your employer, and your employer gets a tax credit from that amount from the federal government. And the way you get that tax credit is you get a reduction in the taxes you pay on your 941 tax payments. Arrange it with your payroll companies. The payroll companies are on top of this. They do a really fine job in putting these together. If you haven't used this and you have people who have been out and you're not paying them, or they're using sick leave, or they're on unemployment, this was an opportunity to pay them that. This program ends at the end of December. It was a required program for certain small businesses. It now becomes a voluntary program for 2021. Voluntary in the way that you have to announce to your employees whether you're going to continue this program or not going forward. The parameters are very similar and the payments are very similar, but you have to announce to your employees by the end of the year, which is now, whether you're going to have this program going forward in 2021 or not. It is not mandatory any longer. So many things to consider. I know a lot of small companies are suffering when their people are not in the office and they haven't been able to replace them with anybody. The beauty of it is you're paying the people to be out of the office, but the government's giving you credits to do so. So if you need replacements while they're out, you can find them. There's just no labor pool for that. That's what we found here for sure. And the other option to consider with the increased unemployment going forward is it a better move to lay your employee off and let them collect unemployment during this period as opposed to paying them? So you've got to create policy in your firm, and it can't be discriminatory. It has to be across the board to voluntarily elect this for going forward into 2021.
It does cover, if schools are mandated shut, the FMLA piece of it for the 10 weeks, it does cover that. If the schools are shut, the parents can be paid for that time. So that might be helpful for people because they're probably.
So the parameters are the same as they were in the old law. And if you have questions on that, please email us and we'll go through it. Talk about the EIDL Advanced program right now. So this program was the SBA Direct Lend. If you remember the disaster loans that the SBA was putting out, evidently 50% of the applicants for SBA Direct Lend did not get their loans. Now the SBA is reopening this program and allowing the EIDL grant money, which was $1,000 per employee, up to $10,000 for any company that applies and qualifies for the SBA disaster relief loan. So if you haven't done it and you're considering a way to bring capital in, from what we understand in our discussions with SBA members, is that they're very anxious to get this program fully funded and they want to spend the money. So if you haven't used this program in the past, we recommend that you do use it. The second part of this is a special allocation for this EIDL Advance. And if you're in any one of these categories here listed, you would get preference in this SBA program going forward. So if you're in a low income community or you have an economic loss, you will get preference in the loan from SBA. Most of these loans are coming in about $150,000 and plus the grants.
And they increased the time the SBA is expected to deliver the money from 3 days to 21 or a decision.
Yeah. Okay, now we're going to talk about this employee retention credit, which is kind of huge. So from 2019, if you remember, the ERC was a program that not many companies took because if you got a PPP loan, you were ineligible for the ERC. Now that's changed starting now in that you can get both a PPP loan and you can get the ERC credit if but it has to be on different payroll. So you can't use the payroll for the PPP loan for the credit. But when we talk about the PPP loan, you got 24 weeks of payroll to get your loan forgiven. You certainly don't need all that payroll, so you could qualify for the employee retention credit. Now, for 2019, you had to have a 50% reduction in revenue to qualify for this credit. So it was very limited to that.
In any quarter.
Right, in any quarter. You needed a reduction in revenue in any quarter in 2019. So what the program now changes to is that reduction only has to be a 20% reduction, and you can look back to the fourth quarter as your quarter for going forward. Correct? I'm all correct on that.
So the 206 is retroactive to March 12th, the beginning of the program, and that will make, you'll still be under the old rules of the 50% reduction, and then you'll have valid quarters until your receipts are restored to 80%. So you'll be under the old rules, but you can now in the current quarter apply for anything you would have been eligible for under the old program. And people that are considering applying for forgiveness need to think about that, because if you have excess payroll, it looks like the language lets you reduce that and use those wages for the employee retention credit. So it has the potential with the next slide to be a pretty significant windfall for people between these two. And then the next one is only, so this is only for retroactive, and then the next one is only for 2021, where they made their credit much more attractive.
So section 207, you want to pop that one on? Section 207 is the new program that will run through June 30th of 2021. And here's the parameters for that program. In the old program, you were limited as to the amount of credit that you could get, which is almost doubled at this point going forward. Plus, you had a maximum for the year, and now you have a maximum per quarter of credit. So we have an example on here that we'll show, but you'll see at the the one bullet line is qualifying wages for $10,000 per year per employee. Now they're $10,000 per quarter per employee. So if you are, if you have payroll, excess payroll, and your business has gone down by a 20% decline, then you could qualify for this and the PPP loan at the same time.
And what you might have been eligible for ERC
Correct.
in 2019.
And you could go back and try to figure if you were eligible in 2019, you can go back and get that ERC now. It's a very tricky computation. I don't think payroll services are going to be able to help you with this. So I would strongly suggest that you sit with your CPA, and if you met these business decline levels that you had to hit, if you hit those declines, meet with your CPA and make sure that you're getting all of this credit, because these credits are you can get them advanced. I mean, there's all kinds of programs you get money into the company, and they are in addition to PPP now.
The last slide should be bolded. That's actually pretty important, Joe. So if this is not the same for last year, you can elect for your 2021 to use the preceding calendar quarter. So if your Q4 2020 has a reduction in receipts compared to Q4 2019 of over 20%, you're able to, and you have less than 500 employees, you're able to request in advance based on the quarterly payroll of 2019, 70% of those wages. And then you can't use those wages with the PPP. Right. But with that and the PPP and the Section 206, there's a lot of potential to for some cash infusion pretty quickly.
So on our next slide, we're going to show a little example of a 2021 payroll situation where you have 4 or 5 employees listed and what their wages are for the first 2 quarters. Now, the first 2 quarters are the only quarters right now that qualify for this grant or for these credits. If you look at the totals of your employees for the first 2 quarters, you've paid wages of $173,000, and the potential credit on those wages is $64,000 that the government will give you back in tax credits based on this computation right here, just for 2 quarters. If this extends out more for the year, you could double those numbers. So it's a very significant percentage of your payroll can come back to you in tax credits through this ERC program. Very careful to make sure that if you qualify from the reduction in business, that you go back and look at this for sure. And we're here to help you if you need help on that. Okay, so the next we're going to get into is our PPP update. Everybody knows what the PPP is by this point, I hope. If you don't, I would say go back and listen to our earlier webinars, but certainly the PPP loan was the payroll protection, paycheck protection program that came out in March of 2020. You were able to borrow a certain amount based on payroll from 2019. You had to keep a head count of employees, and you had to keep payroll within 75% of the payroll from the prior year or prior quarter in order to get full forgiveness going forward. Forgiveness rules have changed a little bit. We'll get into them. But the head count and the, assuming that you're over $150,000 in your loan, you still have head count. You still have head count and payroll restoration percentages in all of your forgiveness, but the applications are different. So what's happened? The number one biggest thing that happened is something that we've talked about since the very beginning of our webinars is the taxation on the expenses that were paid with PPP money. So the Treasury Department, including the IRS, came out and said that if you got PPP money and that money is forgiven, then the expenses that money was used to pay are not deductible. So in essence, your PPP forgiven money becomes taxable. You're on a 40% tax rate. You got to get 40% of that money back to the government. That was never the intent of the CARES Act. The CARES Act had always said that the proceeds would be tax-free, but it never addressed the taxation of the expenses. That taxation was a Treasury Department rule. So in order to get that changed, Congress had to act, and Congress did act. It took a while. There was a lot of pressure on it. Millions and millions of letters went into congressmen to make this change, and they acted. I guess they acted in the right way. So right now, all the expenses that were paid with PPP money are fully deductible, and we're going to say they're deductible for 2020. Presuming your loan is forgiven or will be forgiven, those expenses should be deductible in 2020. So the IRS guidance that came out has been shut down. They're not happy about it. Treasury Secretary tried at the last minute to jack into the bill that your expenses would be deductible only if you had a loss of revenue, and they threw that out at the very end, thankfully. Also, EIDL grants that people had received through their SBA disaster loans were not forgivable in the first go-around. They are now forgivable in total. So anybody that's applied for forgiveness already and been granted forgiveness and may have had to pay the EIDL grant money back, which is maxed at $10,000, you can go back to your banks now and ask for a change in that forgiveness so that they can forgive the EIDL grant money. This is one of the reasons that we have recommended for months that people don't rush into forgiveness, because the rules were changing as we go, and now they're all changed again. So if you have received forgiveness and you did get dinged for the EIDL grant, go back, contact your bank, and get that process moving so you can get forgiven on the EIDL grant money. So the payroll costs that were used in the first PPP forgiveness application are now expanded to include group life, disability, dental, and vision insurance as part of the payroll costs. So that could increase your ability to get more PPP money in the second go-round if you qualify. Also, the expenses that were allowed originally, you remember, mortgage, interest, transportation, utility costs, rents, were allowed as PPP deductions as part of the non-payroll costs. So those expenses have been expanded as well to include the list that we have here. Business software, cloud computing, expenditures to suppliers that are essential. Big question mark next to that. We have no idea what that means. I would assume that every supplier is essential. Worker protection costs. So if you retrofit your offices for COVID, you would get those expenses could be covered on the PPP loan forgiveness part. And then any property damage that was due to looting or anything that came during 2020 would also qualify for the non-payroll piece of the PPP forgiveness. All of these expenses are also rolled back to the first PPP loan. So if you're having a forgiveness challenge, you could expand the forgiveness a little bit to include these expenses in there if it helps you out. One item I just want to talk about quickly is what they call stock basis. And as PPP was forgiven and became taxable, the old program would also increase your stock basis because your basis is your at-risk amount in your investment in either LLC or S corp. So right now, the rule that's sitting out there, and it's very subjective at this point, says that if your PPP loan has been forgiven, then your stock basis can be increased by the PPP amount of money, even though it's not included in your income. If your loan hasn't been forgiven, but it's reasonably sure that it will be forgiven, it can also be a part of your basis, the stock basis in your company. Why is that important? Well, if the company has excess cash at this point and it wants to withdraw its cash, if you're an S corporation, you need to have the basis in order to do that. And if you haven't received forgiveness, or it's not likely that you're going to receive forgiveness, and this PPP loan remains as a debt in an S corp does not increase shareholder basis. So if the shareholder removes the money, he could have taxation issues for the withdrawal of that money. There are ways to get around that with shareholder loans and things of that sort, but you've got to discuss that with your CPA. The other thing is that if your company is in a loss position and you don't have basis in that loss, you would have to carry that loss forward to get any tax benefits until you do get basis. So our suggestion at this point, we're really unclear on this, is we would suspect that everybody's going to know whether they're forgiven or not before they file their tax return, or at least I would hope they would. And that's what our recommendation is going to be now that this bill is passed, is if you're an S corp, start getting your forgiveness in there so that you can increase your basis if you need it for basis. But again, it's a very few people are affected by this, but if you are, you want to talk to your CPAs for sure to make sure that you can get the money out of your company if you can get the money out of your company. All right, so let's update for the new loan. First, we'll talk about forgiveness. So if your loan is under 150, your first loan is under 150, it's a one-page forgiveness application where you're going to attest that you needed the money for economic uncertainties and that you used the money in the right way that was required in your loan agreement. So you spent 60% on payroll at least, and you spent 40% on other covered expenses. You have to answer a few other questions. You have to disclose the amount of the loan, the number of employees and things like that. And then that's all you have to submit for forgiveness.
So the $50,000, if they follow the same procedure, one of the attestations said that you've submitted to the lender something showing you've paid payroll. So it doesn't go to the SBA, but you are going to have to submit a brief summary to the lender for their records because the attestation says so. But I think it'll probably be very similar.
And one of the things that we're recommending is that you do complete the full forgiveness application for yourself, so that if you're questioned in any way on the under 150 loan, you'll have the backup that you'll be able to supply the bank. I don't know how anybody's going to really get down and dirty into these loans. 150,000, from what I understand, is like 88% of all the PPP loans were under 150. So this takes a burden off the bank a little bit and probably gets the forgiveness done much quicker. So an ability to request a PPP loan amount increase. So if the rules change, the changes in these interim rules affect you, and the SBA has to come out with some guidance on that. There is an opportunity. You can go back to the bank and get an increase in your PPP loan, but not if you've already been forgiven on that loan. But you can amend your forgiveness if you have that EIDL. If you have the EIDL amount was not forgiven, you can go back and get your bank to forgive that amount. Okay, now we're going to go to PPP number 2, which is another hot topic. So SBA has 10 days from the signing of the bill to issue guidance, but they have not issued any guidance yet. So good luck on getting anything done in 10 days. Some of the terms of PPP 2 are similar to the first. Size of payroll, maximize payroll at 100,000 per person. So it's all similar in this second program. The first-time applications, if this is the first time, you have the original PPP loan guidelines. Also, 501c6 organizations who were not eligible in the first round are eligible in the second round. They would include chambers of commerce now can get PPP money. You have to limit your lobbying activities. Obviously, there'll be some rules that come out on that, and 300 employee limit. So a second draw, so the second PPP loan, who's eligible for that? You have to have no more than 300 employees. You must have spent the first PPP loan totally, we'll talk about that, and had gross receipts in the first, second, third, or fourth quarter of 2020 that demonstrate a 25% reduction, at least, from gross receipts in the corresponding quarter from the prior year. So your second quarter of 2020, your gross receipts were down by 30% over the second quarter of 2019. You qualify for the second PPP loan, regardless of what happens after that point. So your revenue can be up for the year, but if it's down in one quarter over the prior year, you qualify based on these rules as they are written right now. There are no definitions on this. This is simply the situation. Now, did you spend all your PPP money? It's an interesting topic and one that we're arguing about in the firm here. So if a client of mine has got a $700,000 PPP loan, spent their money, paid their payroll, had a decent year, broke even for the year, and now has $700,000 extra in his bank account, which he now wants to take out. Did he spend all of his PPP money? We don't know the answer to that. We're assuming he did because he followed the rules, but that's something that's going to come out that's a little tricky, just to see if you really did spend your PPP money. But I don't think that the government's going to come out and hurt anybody at this point.
It also concerns with the attest that you needed.
Yes, so your attestation is very important, and the attestation is a little enhanced on this second loan to tell them that you really needed this money. So this is more of a need-based loan because there's an income requirement in this second loan. So if your income did not go down in any quarter during 2020 by 25% or more over 2019, then you do not qualify for this loan. Here's an example of what happens. You'll see here's the quarters between 2019 and 2020. First quarter, you don't qualify. Second quarter, you do qualify. Third quarter, you do qualify. So this company would qualify for a new PPP loan regardless of what happens in the fourth quarter. And the determination they're calling it right now is a gross receipt. There is no definition of what a gross receipt is, but some of the discussion we've had is that you would have to prove the quarter gross receipts by providing bank statements that would show the reduction year over year. We don't know that yet, but that's what we understand gross receipts to be.
And they did ways that you don't have to substantiate for small businesses, loans under a certain amount.
All right, PPP2 again, the necessity test. This is going to be more of an issue that you have to attest that you needed this money to support the ongoing operations of the applicant. Still very subjective, still undefined, but our recommendation now is that if you qualify for this loan based on the income reduction test, then we should be applying for it when the application starts. The loan amount is based on 2.5 times your average payroll from 2019, with employees being capped at 100,000 for the year. You're going to use the 1 year period before the loan application or the calendar year of 2019. It's a $2 million maximum loan amount. It was $10 million in the first go around. They certainly didn't want the large companies coming in here and grabbing all the money again. If you're a standard industry code 72, you start with a 72. If you're a restaurant, food service, hotel, entertainment venue, your loan computation is 3.5 times the average payroll, not 2.5 times. So if a restaurant got a $300,000 PPP loan in round one and meets the 25% reduction in revenue in any quarter in round two, they would qualify for a $420,000 second loan. Totally forgivable and non-taxable, already in the program. Forgivable if you spend it in the right way. But it's already in the program that this second loan is non-taxable, so there won't be any of that BS going around. All right. A lot of questions are going to come up on that. We got to call out a little call out to our lenders because I know we have a group of bankers on the phone or on the call. The webinar today. Love Your Banker week became Love Your Banker quarter, became Love Your Banker year. You should be very close to your bankers. They are not only going to deal with the forgiveness piece of the first loan, now they're going to have to deal with the application you submit probably in January for the second loan. So love your banker. If you were forced to go to a new bank to get your PPP loan and because your bank was either asleep at the switch or slow to act or wasn't doing the program, then I would highly recommend at this point in time, transfer your bank accounts, open up an account, create a relationship with that new bank, because you're going to need them really in this next 30 days if you're going to get into this program. And bankers are just not looking forward to this at all. All right, what's the next one is, okay. So we have a next webinar. So we've already set up a next webinar for January the 12th. We hope by then that we have a ton of clarity on what we have so far. I don't know that a whole lot's going to get done once Congress goes away, but this is going to be a Treasury Department and SBA situation. There is transition in all of that. You know, all of these people are going to change jobs in another 30 days. So I'm hoping that by the time everybody gets their tax stuff in, that we have a lot of clarity on what goes on here. But again, go to our website, post any questions you have in the QA. We have a list of them right now that we'll go through. Go to our website. We have a special CARES website. And if you don't get your question answered today and you have a specific question about this, please email us at www.brinkersimpsoncares.com. Send the email. We do answer all of the emails. Be patient with us because one time we had a webinar and we got 80 emails and we were going nuts trying to get them all answered. So cares@brinkersimpson.com is the email address that will get specific attention to this.
And the recording for today will be posted to brinkersimpsoncares.com and the slides.
Tom, anything you want to add in there? Anything we missed?
No, I think you've got a lot of questions that we're going to go over. So
yeah, we're gonna pop the questions up now and go over them. So far, we have about 30.
All right.
All right. FFCRA, paid sick leave. Do employees get an additional 80 hours in 2021 if they use the 80 hours in 2020?
They do not.
No.
And you exhaust all your time. One recommendation I'm seeing is to look at those balances now and use that in considering if you're going to continue to offer it. And if there's only a little bit left for a few employees, it's not a huge deal. If no one used it, it might be something you're not going to consider offering.
Right, you have to consider it first because it's voluntary now. Would it qualify for union workers? We don't know the answer to that, but we will find out the answer. I would strongly doubt it.
Yeah, I don't think
any union workers, I doubt it.
And it's not, so it gets rid of the mandate anyway. It's just a voluntary thing. I don't think if there's over 500 employees, you're definitely not.
No, I know this is a smaller company, but they do have unions. Well, how will the states treat PPP forgiveness EIDL advance, specifically PA? There is no answer to that yet.
Every state have pending bills. Like New Jersey is
Correct.
probably going to pass one very soon with some PPP language, but it's going to be a political football in all states.
I would think that states that follow the federal tax return, which Pennsylvania is not one of those states, would follow the federal return. Pennsylvania is going to be its own animal. They're going to have to decide what to do. I would hope that they don't tax it. Will we need to show the need with the new PPP, assuming we meet the 25% down in 1 quarter requirement? You're going to attest to the fact that you have a need. There is no showing of the need. You're going to attest to it. So you're going to have to, everybody's going to have to do the attestation. I don't know that the 25% downturn qualifies you as a need, but it certainly helps your costs for sure. I mean, what happens to the company that's down 25% 1 quarter and up 75% the next quarter? That's where the questions come in. Our PPP was illegally used by someone to apply for a large EIDL loan. Wow. I didn't realize that.
There's a ton of fraud in the EIDL program, and that's why the 3 days to get the money went to 21, because they've now added a provision that they're going to confirm with the Treasury that you are an eligible business and you exist and you file tax returns. In the first round, there was the opposite language that said you were not allowed to do that stuff, and so predictably there was tons of fraud.
Yeah, that's a good point, is to be careful, and LifeLock is a good program that I know I use personally, and we use it at the company as well to keep an eye on things that are going on in your name that you're not aware of. Is EIDL still 1,000 per employee up to 10 employees? Yes, 10,000.
It's 10,000. They did the $1,000
Right.
per employee because they were running out of money. Now that it's replenished, if you only got 3,000 because you had 3 employees, you now are eligible for 7,000. And I think the ordering rules will prioritize people who got less than the 10, and people who applied in the first round but were locked out. Those people, I think, get priority on that.
How can you help with ERC eligibility? What do we need to send you? That's going to be
Alcohol.
a lot of payroll issues that we'll have to look at. Just email us after this, and we'll give you the list of what we'll need.
If the ERC continues the way we're reading it, I think that's going to be the most important thing. You're going to want to consult with your accountants to make sure you're using the programs in the best and most efficient way to take advantage of as much as you can. I think it's the underdog of the more popular programs.
So the question presented is, do we need to show each 2020 quarter with 50% less than 2019 to be eligible for PPP? First, it's a 25% reduction.
Yeah, I was saying
PPP.
Okay.
Yeah. So PPP is a 25% reduction in 2020 over 2019, and it's only one quarter that you would qualify in as it's written right now. I mean, it doesn't seem to make a whole lot of sense that if you have one down quarter and 3 up quarters, you should qualify for the loan, but that's how it's written now. In terms of employee sick payments, we continue to pay our employees' salaries when they are sick. Can we reclass to get tax credits? When you say you're paying your employees' salaries, if they're sick from COVID, you should be getting these tax credits. You can go back and get them, because the way the tax credit system works is you get a credit when you pay your 941 taxes. So you should go back in, work with your payroll company to make sure you get credit for what you paid those people.
And if
Because
you
they
already
qualify.
filed, you do it this quarter, but
Yes.
not if you use those wages in the PPP. Then you're just kind of.
When do you recommend applying for PPP forgiveness? It is before the inauguration. I don't know. I would talk to your bankers and see what your bankers think. If you're at the point where you know you're going to get 100% forgiveness, then there's no reason to wait, in my opinion. I don't know that these rules are going to change and impact that too much. I would try to get the forgiveness done.
Especially if you're just a sole proprietor, you don't have payroll. If the ERC 2019 calculation is something you think might apply to you, I would hold off and do that analysis before you apply.
Do I understand it correctly? The PPP money received is not taxable, and we also get to deduct the expenses. Yes, you understand that 100%. That is the big change.
Sarah and Christine, if you're on, I'm very excited for you.
I withdrew our EIDL app when it appeared that it would offset the PPP forgiveness. Now that this guidance has changed, it is advisable to reapply for EIDL. All right, so EIDL never offset the forgiveness, not the loan, only the grant, which was the $10,000 we'll talk about. That was the only amount that would offset the PPP forgiveness. So I would certainly go back and start the process again and go through the loan process, which leads to the grant funding. Will payroll include full-time? No. 1099s? No, not included in payroll. Though they can apply on their own to get their own PPP loan up to like $20,833 they would qualify for, but they can't be a part of your payroll if they're not a part of your payroll.
I mean, unless they're under the new expenses, if you're somehow IT or something, but yeah.
So there is one exception to that with fishing boats, but beyond that, no.
Nice.
Oh,
All right, all you fishing boat people.
all right.
Why are they offering 8 weeks or 24 weeks to use as a covered period for payroll? 24 weeks gives you a larger payroll to take 60% of. Exactly. They want you to be forgiven. That's why they're making that offer to you. They don't want you to have to pay this back. My PPP forgiveness was $850 more than what I received. Okay. I also received the EIDL advance for 10. Do I need to ask for this amount to be credited back, or no, because the amount's larger? You can only be forgiven up to the loan that you got. So Kim, you got the most forgiveness that you'll get. You won't get any more. We are a partnership with 2 owners, but no employees. Our PPP loan amount was based on our K1s, which provided us with a PPP loan of about 80 grand. We streamlined forgiveness on the loans under 150. Can we expect to get our full 80 grand loan forgiven? I don't know how you got 80 with only 2 partners. That's too much.
It should be closer to 40.
Yeah, you should have gotten 42,000, 20,833 for each person. That was the maximum. So my understanding is that you'll be forgiven 40,000, not 80,000. But you email us after this or talk to your accountant and make sure that your numbers are right there. Just to clarify, the second PPP is also forgivable. Yes, that's correct. It's forgivable assuming that you spend the money 60% on payroll, 40% on other expenses. Those expenses are expanded now. So as long as you follow the rules of the PPP, you will be forgiven. What is the time frame for when Paychex expenses will have to be spent to cover? So the second PPP loan is, again, anywhere, it's either, the other loan was either 8 or 24 months. This loan is or 8 or 24 weeks. The second loan is anywhere from 8 to 24 weeks for forgiveness. So you can stop in the middle and be done, or you can go out the full 24 weeks. It depends on your head count and how you can sustain your head count, because those things still have to be addressed. Okay, is the entire PPP loan amount can be used for payroll during a 24-week period? Yes. The entire amount can be used for payroll. Yes. Only 60% has to be used, but you can get forgiveness using 100% on payroll, and you don't need those other expenses. Correct.
My answer for that has always been yes, but now if you think you would have benefited from the ERC, then I would say no. Only use 50, right. Make the 40, get yourself to 40, and then use those other wages if you're eligible for the employee retention.
Right. So that's the tricky part of this new loan. If you can get both the credit and the PPP forgiveness, then you would want to put less payroll on PPP. Just do the 60%, and then use that other payroll to get the ERC. Very tricky. How does the extension of SBA loan deferrals work for loans that were completed in September and the government is paying P&I through March? That is correct. Will a 3-month extension cover April to June? Not as far as I know. You're good till March. Forgiveness of the first PP loan required before applying for the second. The answer is no to that. So there is no requirement. You can get the second loan while you still have the first loan unforgiven. Can entrepreneurs qualify for ERC money? No, you need employees. How long do we have to apply for forgiveness? The forgiveness application has to go in 10 months after the date that your forgiveness period closes. So if you're using a 24-week period, and that 24th week was October 15th, you have 10 months from October 15th to get your application in. If you don't get your application in, that money becomes a loan. So you want to make sure you get it in within that 10-month period. We're telling people now, get ready, get started. Let's start getting forgiveness done, because I don't think there's anything else that's going to come down the pike that's going to help us with the first loan. The second loan is a separate situation because that hasn't even been granted yet. But the same 8 to 24 week period will be in there for them, assuming that the same 6 months, 9 months with SBA and the bank will be there too. I'm not sure of that, but for the first loan, you got to get it in within 10 months. For smaller loans under 150, are you saying all the guideline requires wage levels, FTE equivalent levels still apply, but the difference now is that you don't actually have to show documentation. Instead, you sign the application attesting that you complied with the guidelines.
I think that's unclear.
It's unclear, but we think that's how it's going to work right now. We really think that anybody under 150 is going to have a 1-page or a 2-page application to put in without support. But we're telling you to get your support together in case the bank's going to ask you for it. Are there other reasons to go back to an original PPP loan and ask for more money besides the EIDL issue?
So there is certain situations where you would want to go back and ask for more money if you were concerned about the necessity test and took less money than you could have in the beginning. You may want to go back, but really this is going to be very limited where you're going to request an increase in your loan amount.
Right, so it's only if you didn't take the maximum in the beginning.
As the rules came out, I mean, the most recent interim final rule was on October 13th or something. And what this says is if any of those rules that came out meant that you would have been eligible for more money, you can request it now. Like the increases to health insurance or the way that owner comp worked, things like that. If you would have been eligible, then you can apply for the difference.
For PPP2, do you have a choice when selecting the payroll measurement period? 1 year or 2019 payroll?
Yes.
You have a choice. Any changes for charitable contributions in 2020 or capital gain rate for 2020 or 2021?
Yes.
Charity, you can, if you're a non-itemizer, you can deduct, and you're a married joint taxpayer, you can deduct $600 in charity if you paid it. There are no changes in capital gain rates for 2020, 2021. There's talk about changes, but you're going to have a new administration in there, so we'll have to see and wait and see what happens to capital gains in 2021. I don't think taxes are going to go down, but that's just my answer. Are self-employed or gig workers able to apply for PPP2? Yes, you can apply. If you were eligible for the first one, you're eligible for the second one, assuming you have the reduction in income for any quarter.
And the pandemic unemployment for the gig workers also was extended.
Yes. If the bank made an error on my first loan, can that amount be increased now? I would talk to your bank. I think the answer is probably yes. This gives you a window to fix that first loan if there was a problem on it. Given the bank made an error.
They might be. That was the one.
Oh, okay. Same question. Is there a new round of EIDL loans? There is. We'll call it a new round. I don't think it ever ended. It's just resurfaced, we'll say. So that's an SBA direct program. So you want to go into the SBA disaster relief website and apply through there. If I had one employee and got $1,000, you can now get $9,000 from EIDL.
I think so.
Yeah, we're not sure on that one, but
I believe that's be the case.
if you get that loan, you get the credit up to $10,000. So I think you can get the whole thing. I don't think they're counting the heads right now.
I'll let you know on that today, though.
When will the PPP applications be available? I would assume sometime in January, I would hope, but nothing's available now. Our S-Corp accounting is set up on a cash basis for tax purposes. We show a significant decrease in revenue on an accrual basis for 2020, but not much on a cash basis. That's a great question. And that's not one that we have the answer to right now. So the question is, we show an accrual loss in a quarter, but we don't show a cash loss in a quarter. What's the criteria for qualifying for the down quarter? Right now, the definition says cash receipts, which to me sounds like cash basis. I would think that accrual basis accounting for any quarter could be manipulated by timing of invoices. So I'm assuming that that's why they won't allow accrual basis, but we don't know the answer to that. Hang on. That'll be one of the first questions to answer because it's asked a lot. I received a PPP loan in March. I had to close down the business in July. I could not afford it. How does it affect my forgiveness? The closure of the business does not affect your forgiveness as long as you use the PPP money that you got to pay 60% payroll and 40% of those other costs. As long as you follow the rules of forgiveness, you will be forgiven. And the fact that you're closed still allows you to go in and apply for the next PPP round, assuming you spend that money in the right direction getting it.
You're gonna have to, you have to keep those levels, those tests for your cover period. It doesn't matter what happens after that.
We have to calculate on a cash basis. That's the same gentleman that asked a question about accrual basis. And I don't know that, Bill, but I think that you would want to do both right now to be ready. So when the answer comes out for that, we'll see what that answer is. I understood in the beginning was they were going to ask you for 3 months of bank statements for 2019 and 2020 to determine whether you hit 25% or not. So I heard that very early in the discussion, but I haven't heard it later than that. Okay, what is the time period for PPP2? 8 week to 24 week or something different? So it's the time period as it's written right now is between 8 weeks and 24 weeks. You make the selection as to how long it's going to take you to get the forgiveness, then you can stop. Is there a date to submit your application, or is it still 12/31/20? All right, so this is a forgiveness question, I guarantee you, because I've gotten this a lot.
Yeah.
Banks have told people that they have to submit their application for forgiveness by 12/31, which is not correct. That's not correct. You have 10 months after your 24-week period runs out to submit your application. The PPP program ends on 12/31/20. The first program ends. So you got to have your money spent by then. But the application has to go in 10 months after your period. What is the max per employee PPP amount? I thought it increased when the time went from 8 weeks to 24 weeks. That's a forgiveness amount. Correct.
Yeah. They did add language in here to prevent you from doing 46,153 over a 12-week period. They say it's prorated over your selected covered period.
Right. This gentleman's talking about the forgiveness application, not the application to get the loan. To get the loan, you're 2.5 months of what is it, 2.5?
2.5 months
of average payroll from 2019. That's to qualify for the loan. Do you have to apply for ERC credits? Yes. You apply through, if you're using a payroll service, you apply through your payroll service, and they will adjust your forms to give you the credit on your 941 returns. That's where you get the credit. So when you go to pay your payroll taxes, you're paying less tax. That's how you get the credit. And you use the ERC on weeks after the 24 weeks of the PPP for payroll in the last quarter of 2020.
First, you have to have an eligible quarter. One of your quarters has to meet the test required. But then you can do it within the 24 weeks if there are payroll costs you're not including on the PPP eligible forgivable payroll.
Right. So if you're not using the full 24 weeks for forgiveness on the PPP because you don't have to, that other money, that other payroll that's in that 24-week period can be used for ERC if you qualify for ERC. You might want to email us, Kim, and discuss that. That's a tougher question.
It is tricky. The ERC and the PPP is going to be something you're going to need to either build an Excel spreadsheet for or have us do that.
Good question. Are PPP1 and PPP2 connected, or are they two separate loans? It's a good question for one reason, is that the maximum amount of borrowing is $2 million on the second loan. If you borrowed $1 million on the first loan, are you only allowed to borrow $1 million on the second loan? The answer is no, you can go up to 2. However, if you remember that loans over $2 million were going to be pulled by SBA for audit, does that mean that your first loan of $1 million and your second loan of $1 million that now amount to $2 million total are subject to the SBA scrutiny? We don't know the answer to that, but we kind of fear that a little bit. So, Marianne, I'm going to answer your question is that they are not connected. They are two separate loans. There will be two separate criteria for them, but we'll have to watch what, if the total loans exceed $2 million, what happens at that point. Once the one-page app is completed, just forward it to the bank. Yes.
Has anything been that easy
Yeah, nothing's that easy, David, but
You're gonna have to create a portal and submit stuff anyway, and so.
I know you're an accountant,
I can
so
help you.
I would send it to your accountant first and have him take a look at it. And if he's not very sharp, I would send it to somebody else in that firm who will take a look at it for you.
Some banks are letting you just email, but most have a portal where you have to go in and register and submit it that way.
And some have shut their portal down, just so you're aware. I had my loan PPP for 75 already forgiven. I only received 6,000 in the EIDL grant. Will I still qualify for the additional 4 during the second round?
I'm almost certain I'm reading the text of it now. The original amount in the CARES Act was $10,000, and then they reduced it to per employee, $1,000 per employee because they were running out of money. And now you can be restored to the full 10,000.
So you got forgiveness of 75, but you probably lost forgiveness on the 6th grant that you received. So you may want to go back to your bank and get forgiven on the 6th, and not may. You want to go back to your bank and get forgiveness. And you should qualify for the additional 4 if you apply for it. You're going to have to go to SBA and apply.
But nobody would have started paying them back yet, so they're probably just going to write the balance off,
Maybe.
at that point, unless you pay
Yeah,
the
that's
lender.
For PPP1, do you still have to reduce your forgiveness by the amount of the EIDL grant? No, you don't. When can we apply for PPP2?
If any
Soon.
bankers want to tell us, we
Yeah.
would really love that.
Any banker want to chime in? And Charlie, you still drinking, or you
Is
want to?
Carl on here? Because I'm sure he's probably doing them right now. Or he's drinking, sure.
Why do my managers ask me hard questions? For PPP1, I spent the funds in 13 weeks. Do I measure forgiveness at week 13, or do I need to wait for week 24? Could affect the FTEs if headcount changed from week 13 to 24.
You can judge your FTE at the interim date of application. That's why the whole cover period thing to me is not really that big of a change. But if you have a salary restoration, if you reduce salary, you would have to restore that to 24 weeks if you applied early. If you didn't reduce anyone's salary, and you can have your FTE count judged at the time of application that you apply.
So you can stop in between. You don't have to go to 24. All right. Has the forgiveness application on a loan under 50,000 been finalized? Yes,
They've been processed.
it has been. So those loans have already been processing. I don't believe that there's any change in here that will affect that. So if you're under 50, get your forgiveness. Does rent to self count as a deduction? The rent to yourself is limited to the amount of interest you pay on the mortgage on that property. So if you rent your property to yourself and you don't have a mortgage on that property, then that rent is not included. However, you can go back to this new list of expenses and look through those expenses to help you get to the 40% if that's what you're looking for.
Charlie raised his hand.
Okay. After PPP1 was done, I laid off my 3 employees and they are all still on unemployment. Assuming I get the second loan, I want to hire them back. I know that one is already not coming back. How does that affect my PPP2 money? Got to replace that person, I think. And yeah, you're going to have to replace the person to get to the payroll number, most likely. If they leave because they voluntarily leave and won't come back, you get a letter from them telling you that, and you can take them out of the head count, but you may need to hire in order to make the payroll dollar part. It's a good question. I have to do a little bit of math on that one, probably.
And they may still have those FTE safe harbors about the economics, but you're still doing it based on 2019 payroll.
Yeah, we haven't gotten that deep in the weeds, nor has the bill. Again, this is just a bill. It's not a rule yet. TD Bank has just suspended their forgiveness application. I did mention that some of them had turned off their portals. So that is something that I did learn about this week. So you just got to sit tight a little bit for now. Is it worth rehiring people to get the retention credit? No, I think you should get rid of people, actually. That's what we're considering here to get the retention credit. The answer is no for that.
Because first, you have to be down in economic activity, first of all, and you're still paying 30% of the wages.
Right, you're not getting a full credit plus the taxes.
Yeah. Shit.
And how does an employee headcount work with the new PPP? We had 5 employees for the 8 weeks, reduced to 3 and have maintained this level. Does this affect the eligibility? I'm going to guess at this one, and I'm going to say that when you do your application for the second loan, you're going to use a head count from that period going forward to match the head count from 2019, but I'm guessing at that right now. So yeah, you could be affected by the head count if you're down. You may have to bring people back with the money that you're getting, because you're getting the money, remember, based on 2019 dollars, which could be a whole lot higher than your current employment.
Would also,
go ahead.
There would also be, circumstances where if you were closed because of government issues, you could have a reduction in headcount. So it depends on why you have the reduction in headcount.
Okay, I just now tried to apply for an EIDL grant, and it said no longer available, only the forgivable loan. The non-forgivable loan is available. Yes, that's correct. You got to apply for the non-forgivable loan in order to get the grant. The grant is attached to the loan application. So apply for the loan, you can always turn it down and get the grant. For PPP2, does the company need the same FTE count as the first loan? I laid off 4 of 6 people due to loss in business. Again, we don't have the answer for that right now, but I'm going to surmise and say yes. You got to maintain your head counts going forward.
Charlie was trying to tell us the answer here, but I couldn't figure out how to.
Okay,
how to call
so a representative from Meridian Bank who's on there right now is starting the applications for the second loan in the 3rd week of January. So I guess they're in the know more than we are, and they know that SBA is going to have those applications ready. They should, because the applications really don't have to change too much.
Thank you.
So, but thank you, Charlie. I'm eligible for more EIDL grant because I only received 1,000. Will they automatically send that to me, or will it be credited because I took out an EIDL loan? It's a good question. I think you want to go back and just ask SBA that question.
Actually, maybe not, because there was a ton of fraud, but
yeah, I would ask them.
Look for their emails. They do email, so you might or log into the portal that you have.
If you applied for the first round of EIDL grant and did not receive anything, we got an SBA loan for 10,000. Can any of the loan amount be converted to grant money? The grants would have been based on payroll headcount. I don't know why you would not have received the grant, but I doubt that the loan can be converted to grant money. I would go back again. You're gonna have to ask SBA that question, because they're gonna know the rules. I asked a question about PPP2 and 1 of 3 employees not coming back. You said to replace her. Can I just pay the other 2 more to equal the same payroll? If she voluntarily does not come back, she comes out of the head count. So I think the answer is yes, you could pay the other people more, as long as they don't go over that $100,000 per person limit.
But you might just want to use it on the other expenses if that's, whatever works. They're trying to match what the economics require, rather than having you pay people to meet the requirements of the bill.
We laid off an employee in 2019, not due to COVID. However, they filed for unemployment with the reason of disaster, and we did not contest it. How it will affect our PPP application? Well, the application loan will be lower because your payroll was lower in 2019. I think you might mean 2020 for the layoff, but check your question there. But I think your loan will just be lower. Self-employed person eligible for 10K grant?
Yes.
Yes. Without payroll.
Yes.
So if a loan is 150,000, no short form, correct? No, that's not correct. If the loan is 150 and below, there is a short form that has to be created. That hasn't been created yet. That's an SBA situation. They'll create that shortly.
And then the last one is that
apply for forgiveness 10 months after whichever, 10 months after the end of your open period, wherever you're if you're using 24 weeks for your forgiveness period, you want to apply 10 months. You want to apply before this, but within 10 months of the end of your 24-week period. So again, if your period like ours ended, our 24-week period ended October 15th, we have until July 15th in order to make application for forgiveness. We'll do it well before that, but we have until July to get it done before it automatically turns into a loan. You got them all? Is there any in the chat?
Oh, let me check the back. Even two, so
If you're a sole proprietor and paying yourself with PPP funds, will you pay income tax? No. Tax free.
I think that's it.
That's it for the questions. We're going to, there's one more or two more just popped on. Do you know when the 3-month SBA payment deferral will start
I think it's
again?
February. I think I read it's February.
Okay, Kristen read it's February, but I do not
It
know
was
the
1
answer to
a.m.
that.
though, so I could be wrong. I think it might be February though.
If you used your PPP money over 8 weeks, would it then be the end of your 8-week period? 10 months after the end of your 8-week period? Yes. If 8 weeks is the end of your period, you've got 10 months from then. You're still in plenty of time, but that's the answer. Okay, where are we?
That's it.
115, not too bad. We answered 71 questions. And thanks for everybody that was there. Here's our website and our email address. Please email the questions if you haven't gotten an answer, or if you want to get clarity on any topic. I'll thank Tom and I'll thank Kristen, and I hope everybody really enjoys the rest of the week and has a very happy new year. And I can't wait till 2021, as I'm sure everybody else can either.
Send your
Thank you,
bankers.
guys.
Send your bankers some liquor.
Yes, send your bankers a gift. If you haven't given your banker a gift, you better give it to them now. Thank you, guys.